Alright, let's talk about ESG score, why it matters and what it is. First of all, why it matters. This really matters because it impacts a lot of financing for companies, and companies will try to get a better ESG score to get more money from investors. This is because BlackRock, the largest management company with over 10 trillion under management, uses ESG in its financial software called Aladdin. So big banks use this to make investment decisions, and financial institutions use this as guidance, right? This is why it matters. This dictates money flow. And I will talk a bit in the end also on how this can guide certain company decisions in ways that we don't really understand. But if you apply this framework, then it makes more sense. Alright, moving on to what is ESG. Now, ESG is supposed to measure a company's long-term environmental, social, and governance risk. So these risks involve issues such as energy efficiency, worker safety, and board independence. And as I mentioned, this has financial implications on whether or not companies decide to go along with this or not. If they have high ESG, well, they're going to get more money from investors, and low, not as much. And this is divided, as I said, into environmental, social, and governance. And we will see social with things such as having equity in companies with 50-50 between men and women in boards and in good positions. And we will see working for specific marginalized communities' rights as well within the social. And in environmental, we will see things such as carbon emissions, water sourcing, etc. All these social and environmental things that we see companies talk about in news articles to promote, and we see companies focusing a lot more on this in their annual reports. When I first started looking at companies, this was not a thing. Now a lot of companies will have a specific report for these issues covering it, and this is why. Alright, so if you see a company make a decision, alright, now we're on to company decisions, that makes absolutely no sense to you, that you think they're burning money, you think that it's not the best way to make a lot of money, well, it's because the landscape of corporations has changed a bit. It's not only about making money now, it's also about the ESG score, to have these social causes being driven to drive a specific type of agenda that they think will improve communities, that they think will improve societies, that they think will improve environment, etc. And then this is being rewarded with more investor money, and this drives up stock price, this secures financing to undertake corporate projects that they want to do, maybe build a new bridge or whatever, just giving an example here, alright? But you can use your own mind in this, because it's very apparent when you see it being communicated in a corporate, short information article, and you see these types of issues being talked about. Well, then you know this is ESG score, this is to get more investor money, and also help impact society. Alright, that's been it for ESG score. I hope this made a lot of sense to you. If you have any questions, post them in the comments below and I will answer them to the best of my ability. And I hope that you can use this framework when you look at financial decisions, when you do your own due diligences and analyses to find good opportunities. And as always, I hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.